We don't think about it in terms of margin. What we look at is the PTI, the profit, and the return on capital. Margin is a legacy from when this business was very different. It was very simple, and you made money no matter what. Margins move as a result of a lot of things we don't control. Product mix, point in the cycle. What's important is whether a product creates value or not, i.e. whether the return on capital is above the cost of capital. Sometimes you sell more products, more enough of product that has a so-called lower margin, but it's still value creating. So what we're really pleased about is the increase in profit. You look at Switzerland, profit is up 15%. You look at IWM, profit is up more than 20%. Profit is up 34% in Asia. And return on capital is up everywhere. 19% in Switzerland, 31% in Asia, 34% in IWM. And that's really what matters. When you grow your assets very fast, margins can look like they're going down because you divide your profit by a very fast-growing base. But in the end, the real test is, are you creating value? Are you generating returns on capital above the cost of capital? And there we're very comfortable that we are.
So I still see about 80% of your operating profits are coming from the wealth management business. That's, again, part of the transformation story, less of an impact from the global markets investment banking. What is the future of the investment bank here?
I think it's a great future because they can grow here. And they can grow very strongly. It's something I think our global market people now understand. We've gone for a situation where 59% of the profit came from basically trading to a situation in this half year where it's 19%. Now, the beauty is that the 81%, the other part, is growing very strongly, as you see. Now, supporting that allow our global market people to grow. ITS, which is the new venture between global market and wealth management, is up 25%. Right? So they now have an opportunity to grow, and they're taking it more and more. Mike Stewart, who came to drive equities, and Ebert below him, who does equities derivatives, are completely steeped in that culture and understand the upside of going that way. You see it in Asia. You saw that we went from a 38 million loss to a 94 million profit. That's mostly equity derivatives in the markets in Asia, markets APAC, and that's because they are supporting the wealth management. And they're very much benefiting from the growth of wealth management because we serve the ultra-high net worth, who are big consumers of global markets.
Let's talk a little bit about client sentiment here. Again, I see that in China, some of your activity was a little bit impacted, you say, by client cautiousness in this environment. Can you tell me a little bit more about that? Yeah,
look, everything we do is client-led. For me, kind of a magic word is client-led growth. We're here to support our clients. For a long period of time, because they felt very comfortable with equities markets going up all the time, people were comfortable leveraging. And we had a lot of shared-back loans against equities portfolios. As the economic cycle turns, people feel less comfortable. So what we are selling them today, and you can see it in some of our numbers, increasingly is tools to protect and manage their downside risk. So hedges, derivatives, for which they pay us very well. So this is why, in spite of a change in the environment, you see our numbers going up. But what we do is different. And for me, that's exactly why we are here. That's why we need to keep a broad range of capabilities. There was debate when we were doing the strategies on whether we needed this or that. The reality is, as the economic cycle unfolds, the capabilities that are the most necessary are different. Equities derivatives last year was a depressed business. Extremely low, no activity, no volatility. This year, it's a booming business. So we need to keep all those capabilities and be hyper-competitive to provide at all times the best service possible to our clients.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.